So as we look through the signal that was generated at this point and from that point forward, okay, we have had an additional confirmation here and then downward continued momentum. Prices are trading marked to the market at 1948 and 50 right now, people. That's 1948 and 50, just a tick below the support level on the 15-minute chart here. Targets to the downside are 47.50, again 45.75 and 45.25 on a 15-minute chart. The shaken money flow, long-term institutional smart money tracker has clearly identified a high probability trade in isolation, and that signal was generated again back here, again here, and then now with continued downward momentum, clear to remain, be short. Stochastics back here at this point, the cross from above to below and never look back, and again your secondary firing signal right here, clear to be short at the 48 and 50 level. MACD fired way back here, touched here, and never really looked back. At this point on the MACD, we still have plenty of room to go. For those who believed that this was in sold territory, we have internal resistance here, support here, here, and here. So based on this indicator's findings in isolation, there's still plenty of room to go here. Excellent trade in play. And here on the short-term institutional smart money tracker, the money flow had an additional firing signal that came in right here at this point. On the trendline violation, it came into play here, and with every step to the downside, continued momentum. EMAs were clear way back here and have never looked back. All across the board, the 15-minute charts clear to be short back here and clear to remain. Now, the volume is not as seemingly large as one would expect. However, the sell volume that came in here at this point, right here, at 635 was the catalyst that led things net neutral until enough volume came in, and you didn't need much. It was 749 plus 669. Now that accumulated volume started things off here, which is where we generated a signal to trade short. Now at this point, prices have successfully continued to trade down and down and down, and we are right now, as we speak, at a support level at 1948 and 25. Now at this point, after the preferred in, right back here, at 7 a.m., it's clear that it could be time to get out of this trade and book this profit where the time of day is only 7:08 a.m. And this is more than likely exactly what will happen right now to lock in a profit. As you can see, prices are in between support levels between here and here. However, we want to lock in a profit, and if we have another opportunity with more volume to get out, to get right back in, we'll take that opportunity. So managing the trade to the downside is not just based on the 15-minute charts alone. It's based on the 1-minute charts and the accompanying volume that will come in order to lock in the profit on the trade. And again, that number is 1948 and 25, people. The longer the trade continues to move sideways, the larger the probabilities are that your trade can go against you. As you can see in here and now, net neutral, based on the most recent 1-minute bars, 1, 2, 3, 4, 5, almost 6, including this low, clearly indicates that that could be it for now. So based on getting in at 7, right here at this point, even on the close at 1949.50, you have a 1-point gain at 48.50 early on. This is unusual that we have a trade that starts as soon as the room opens or is in play. So this is quite a gift this morning. For those of you who are long-term holders, The original in here at 7, you're clear to remain long, clear to remain. The 15-minute indicators across the board are clear. Now in this case, on a secondary leg to the downside, we'd be looking to get in a quarter of a point below this area right here. This most recent support level at 48.25, which leaves another possible leg to the downside on an end at exactly 48. And the reason why we're referring to 48 is because we need to be sure that we're getting through the most recent floor support level once used as a target to the downside to be able to close at 48 to get another leg to the downside. So let's get that in there for you right now. Now, as you can see, since prices have moved market net neutral, we're up a tick, 48.75 at 48.50, right? One tick up on the preferred exit, which I talked about earlier. So here's a quick way to lock in a profit. In here, the preferred entry at this point being 1949.75, right here, was tough enough to hit. Because it was a fast-moving bar. Right here. So the actual fill came in at 19, a tick below. It's a correction. That number is 1949.75. But again, because of the fast-moving bar, it wasn't possible to get a fill until 50. In at 1949.50, out at 1948.50, as we called it, here recorded in real time. So this is an early demonstration of how this methodology will find, track, and trade the largest institutions who can and do move prices from one level to another, as we've just seen. Through this level here at 50 and right down to 48.25 in short order. The hold time on this trade was good, real good. Our smart money bias market trading call, as made by the Nightly Market Intelligence Report. For those of you who are new to this room, the Nightly Market Intelligence Report is a report that's broadcasted out 5 nights a week, now included in the subscription for the live trading room, all in one price, on a special offer for this webinar, and allows you to understand where you stand every single day in the U.S. markets, so that you can, and in conclusion, you can understand how to cross the bridge between the end of day and real-time analysis provided in the trading room to make a more informed, comprehensive decision about how many contracts to trade. For example, in this situation, we've gone from net short level 6 to market net neutral because of smart money that came in just on last Friday's equities side on both the Dow and the S&P 500. Now, that volume could drive the prices either way, but we feel at this time it's best to go to net neutral until that scenario plays itself out. So knowing net neutral is the current state of the U.S. markets based on the end-of-day analysis. We're risking a minimum amount of contracts this morning on any trade that's taken, probably throughout the day. And that includes my shift, this watch. It runs from 7 a.m. to 10:30 a.m., and Brad Logan's watch, that runs from 10:30 a.m. to 2:30 p.m. Let's take a quick look at the 15-minute indicators and price levels. You have prices once again that have stalled at 48.75. Now, I just talked about this level earlier. And even though we had something that ran from here to here down to 47.50, at that time, it was advised to be out until more volume came in and prices continued on another leg to the downside. Check and money flow is clear, although marginally up, only based on the current floor level here. Still clear to be long unless this continues to the upside. Correction, still clear to be short unless this continues with momentum to the upside. Price is now contained within a short trading channel here, between here and here. Those prices are 49 on the upside and 48.25 to the down. Volume has lightened up as prices hit resistance. Support now turned to resistance on the 1-minute chart right here. If this resistance holds at 49, there is a strong possibility that prices can continue to move to the downside if more volume comes in, and we can get the additional leg, the preferred entry at 49 on the down. I'll be out of this trade as fast as I got in. So this remains to play itself out, always willing to take the risk. If you look at the indicators across the board, you're clear on shake and money flow, MFIs in its infancy, EMAs, SMI, MACD were good. Volume is strong. 1001, 11,367 contracts, people. Trading ES, near month contract 9, 2014. Looking for prices to continue to the upside. Various price profit targets located at 54.75, 55, and we're moving. Excellent profit already underway after the preferred entry is hit 53.25. You can take this off the table right now if you like. 54.25, 54.50 for a quick early morning profit. 55 flat, mark to the market, 55 flat with a high, and 55 and 25. Secondary volume in a strong. Over 12,000 contracts traded within the current 1-minute bar. Checking money flow, MFI indicators across the board, as you can see, are clear. Now right back down. So hitting the target and getting out is the key. Hitting the target and getting out is the key. Long-term holders, if you are still in this trade, you are clear to remain long because prices have found the preferred in as support on a temporary basis and may continue to trade up as this trade unfolds. Those are for those of you who have a longer term hold time, wider stop. Prices are now up again at 55. And we're looking to get all the way up in this case now to here. This level is located at 56, people. That's 56. And 56 is the number. Just about there. Just about there in real time, 56. The session on this live trading room is being recorded, and we are using the NinjaTrader platform to identify these high probability trades and manage them every second of every trade. 56 is the goal to the upside. Price is marked to the market, 55 right now. You can take this off of the board at 55 if they're getting into 54.25. Prices hold this area. That's a clear indication that prices could continue to trade to the upside. With a failed test at 56, prices could turn back around. MFI, MACD, SMI, EMAs. Still clear. Now here you have it. Here's your 55.25 on your 15-minute level. that's currently being found as resistance people right here. This is what you're up against right now. Somewhat 10 minutes and 30 seconds left within this current 15-minute bar. If price is cutting through, it would be time to get out, lock in whatever profit before prices continue to trade to the downside, right? So this is how you eliminate the risk. Prices don't get to the 1-minute chart resistance level and they top out. It's time to get out of the trade. I'm personally already out of this trade. I don't have a longer-term hold time perspective on this. The 15-minute indicators on the money flow side do not provide the type of full upward momentum that I need in order to stay in this trade. It is possible another leg could be had if prices continue to trade to the upside, but I'm not subjecting my trading to the drawdown all the way down to the preferred entry at 54.25, which becomes an unknown. Copy that. Okay. Good. And price is now trading back down to the secondary preferred entry at 54.25. So in here at 52.50, a tick above 52.25 on the preferred end, and I'm back around when this turns around here high, can't get 56 flat and turns back around and trades down, and I'm out right here at this level. That number is 1955. That's 1955 on the 1004 bar, 1955. Now, if the secondary end here is found as support, more volume comes in, it's possible to get another leg out of this trade, people. Current configuration out of the shaken money flow, clear to be long. And prices are moving up. You'd really want to get in the tick above here at this level, right? At this point, on the close, 1955.50 would leave you in 1955 and 75 traders. That's 1955 and 75. Okay, we'll do the roll-up here so we can close out the tape and post it to the blog for this morning's trading. You've just seen 3 different trades this morning that our methodology has identified with. 2 of them I personally took. The second one I didn't. I know a lot of traders in this room did. That was on lighter volume without an absolute confirmation out of the shaken money flow. So in this case here, we're looking at the end here once again. 1952.75 at 10:01, and then out at 19 55 right here at 10:04 for a very short hold time. That's excuse me, that's 2.25 points gain times $50 every full point move in this market is a 112.50 gain per contract, and then again times my minimum traded 20 contracts is a $2,250 gain to me on this trade. That's $2,250. Okay, longer term holders, you are still clear to be long. You're waiting on the additional volume to come in to push these prices through the current resistance level located by this bar for an additional preferred entry at 1955.75, and it looks like that's coming up possibly right now. Just waiting on a volume. My pleasure to present to the world today. This is Jeff Killian, a Chief Market Strategist for the Inside Technician, cutting the recording at 10 a.m. on 6/30/2014. For more information on this room, contact us through the Contact Us forum at www.theinsidetechnician.com. Prices are trading up. We're in a new trade that will either be an extension of the previous two legs as a third leg reveals itself, or it will be a blow off to the upside. If it is, I'm out of this trade real quick. And we'll mitigate the risk, and that will be the example for this trade. $19.55.75 mark to the market. Holding 58 and a quarter. $5.75. We're looking to get to 56.75 up here to 57.75, people. I'll take it at 56.50. I'll take it. New open. 56.25. 56.50. Here you go. 56.50. That's it. I got it. 56.50. Wow. Blow off. Okay. Okay. 10:17. That's it. I'm done trading for today. 10:17. Long-term holders, you are good. But I don't see it. Money flows are turned back around. I'm not seeing it. No real potential to keep moving to the upside right now. Now 2 minutes later here. That's it. It's more than it. 10:19. So a quick half a point here on this trade. So many trades taken this morning. All of them were profitable. for me. All of them across the board. As you can see, we've recorded every single one of them. I'm going to cut the tape on this again. Quick half a point made. Once again, in here and out here as you saw me in real time. Once again, possibilities of prices continuing to the upside, but where the checking money flow has tapped out on a temporary basis here. I'm reluctant to consider holding the trade any longer. Jeff Killian, Chief Market Strategist for the Inside Technician, signing off on this vid at 10:30 a.m. Marked in the market prices are trading at 1955.50 on 6/30/2014.